happen to mortgage interest rates? Literally, when I'm making this video, this came out yesterday. The headline CPI inflation, aka the inflation rate, tumbled 100 basis points from the previous month. 5% from 6%. This again was lower than expected, though consensus estimates were pretty close at 5.1%. So this now makes the 9th straight month of a lower inflation rate from 40-year highs just in June, which was at 9.1%. The month-over-month drop in this metric is also the steepest we've seen in the decline so far. Well, you might say, okay, cool, Brandon. I saw the CPI report come out yesterday too. What is your point? Well, the point is this. Mortgage rates follow inflation. And if you look on screen right now, or if you're listening to this on the podcast, I'll walk you through this. On screen, I've got a graph that shows mortgage interest rates from 1971 to where we are today at about 6.5%. And you can see the purple line is inflation, and the orange line is mortgage interest rates. And as you can see, as inflation climbs, mortgage rates climb. As inflation comes back down, mortgage rates come back down. And you can see this correlation with inflation and mortgage interest rates since 1971. And so we know that mortgage rates follow inflation. Well, if inflation continues to come down, then what we should start to see is mortgage interest rates follow suit. So that's number one. The second thing I want to look at is, as a result of that, let's revisit mortgage applications. So number one, or what I should say is that in addition to mortgage application, Google searches for the term homes for sale were up 44%. We haven't seen numbers like that since last year. And so you start to ask yourself, interesting, what's going on here? You've got CPI coming down. You've got inflation coming way down. Mortgage application volume responds quickly to recent rate drop. This was a report that came out yesterday. Mortgage applications increased last week for the 5th time in 6 weeks. The Mortgage Banker Association said its market's composite index, a measure of mortgage loan applications, increased 5.3%. And this is now the 5th week in a row that this has happened. So you have more people online searching for homes. You have mortgage applications going up. You have inflation coming down. What's happening here? Well, let's continue to look at this. In addition, Realtor.com came out with another great report as well. They showed that 16.4% more people are actually viewing listings specifically on the internet than weeks prior. We also know that new listings that are priced right are back to getting multiple offers and selling extremely fast. And so this was another report from Realtor.com. The few homes that are listed are getting snatched up fast, according to Redfin. And among the homes that go under contract, nearly half are doing so within 2 weeks. That's up from just a quarter at the beginning of the year. Today's supply of homes for sale would take just 2.8 months to sell at the current home buyer consumption rate, a sharp drop from a 3-year low of 4.5 months recorded at the beginning of the year. So what does this mean? What is this saying? Well, based on the recent events, it looks like demand is making a comeback. Now, yes, we're getting back into home buying season, but you have some of these things that are happening that have more buyers getting off the sideline. There seems to be a rise in mortgage demand once again.